Welcome, everybody, to Women Plus We've Been Waiting For, where we've been having conversations around wealth, power, and social change. And in particular, we've been looking at what has been working and not working in philanthropy and impact investing, where women are part of the change, and where there are tremendous opportunities to do things differently at this very critical moment in time. And we have a very exciting guest again with us today. Cameron Rogers, welcome.
Well, Leeks, I'm very excited to be here. Thank you.
And Cameron, you and I recently met, I'll say maybe 2 to 3 months ago. I was very inspired by your background. You joined Ellevest after 10 years at JP Morgan, where you advised high net worth individuals and institutional investors around how they can align their wealth with their values and their objectives. And it sounds like you've taken this phenomenal experience at a very exciting place. And, maybe for our audience today, would you share a little bit more about you and your journey?
Oh yeah, absolutely. I'm more than happy to. Excited to be here. Through my journey, I feel very privileged. Growing up, my parents talked about money, at least with me. I remember, I'll like take you back a little bit to little Cams, think like smaller Cam, but I distinctively remember my mom taking me to open up my first bank account. I was probably 8, this was the very early 90s. And she took me to open it up because I had some chore money and lemonade stand money and that sort of stuff. But a really formative moment for me was opening it up, putting in my savings, and then beginning to get my, my monthly statements. And what was so formative and striking for me was that I'd get that monthly statement. I wasn't putting any more money in, and that balance was growing. Mind you, this was the early 90s. The Fed funds rate was 5% at the time. So the savings rate was right around 5% at the time. So this was happening, but that was kind of like this early, like, wait a second, this can happen. My money can be doing something for me. Flash forward, I studied at Georgetown University. I was deeply interested in market dynamics, so both globally and then, when one thing impacts another thing. I think kind of like the strange geek out moment right now is seeing everything that's happening with the supply chain and capital markets. And it's, for someone who studied that back in the day and see it playing out, it's pretty interesting, although frustrating from a wallet perspective, especially when your savings is earning you nothing. But I digress. I did work in kind of traditional financial services for 10 years. It was an amazing experience, but in many ways, I saw and felt firsthand where institutions were not serving individuals and where would-be investors in many ways were not investing or not investing to their full capacity. And so I joined Ellevest because that is who we are serving. We are serving those individuals. We are serving those institutions that have been underserved by Wall Street. And it's deeply exciting.
That's fantastic. And I love that you had that experience at an early stage, because I also feel like sometimes maybe some of us run away from the conversation of investing because we're scared by it. And so we don't want to look at it. We don't want to check the bank account. We just want to trust that it's kind of all there. Mm-hmm. And really we're doing ourselves a disservice, because once you familiarize yourself with how it works, not only is it so important, but it's not that scary. It's just really understanding how it works. And so kudos to your parents for doing that.
I'm very grateful, because I realize in a lot of households and there is a lot of other things happening that we don't make it, whatever, that's another conversation for another day. But I feel very privileged to have had that conversation, because you talk to individuals from other families and other households, and it was very much taboo. And unfortunately, if you start that way, it's really hard to just make this part of your vernacular when you're talking with family, when you're talking with friends, when you're talking with a partner. So it's a big deal.
Super. No, absolutely. And I'll bridge that a little bit to what's gotten us so excited here at Lebec Consulting as, part of what I'll call the female financial revolution, which is that, we also know that women are incredible philanthropists and impact investors. I think you have data out there today that says that 84% of women, would love to do more with their investment and in particular have a greater impact. And so, while that's very exciting, I still look back at some of the other data that still doesn't show a majority of institutions that are deciding on how capital is going to be used to do different things in the world being led by women. And it could be maybe that we're not seeing enough data or information in terms of women who might be making that change happen. But in terms of the narrative that we see, there still isn't a lot of women in those positions of leadership and decision making.
Mm-hmm.
So I'm curious from your experience at Ellevest, what would you say, Cameron, are 2 to 3 barriers that are preventing women from doing more impact investments and even taking on or being in these leadership roles, at major financial institutions, making very big decisions around money and social impact?
Yeah, it's multifaceted. I'll start with your first point and just provide some data around that. But there's just under 70 trillion dollars managed in the US asset management industry today, which is just like a big number. It's, can't even feel or touch that. But so think that's hedge funds, that's mutual funds, those are real estate funds, private equity funds, a lot of this group kind of may know those asset classes. Funds that have women or minority owner or part of leadership are just 8.6 of all firms represented. But it's even more striking when you go down to the asset level and the asset management level, because women and minority owner operators, investors only represent about 1.3 trillion of assets under, 1.3%. Sorry, I'm throwing things around of assets under management. So I think one of the first barriers is just kind of looking in the reflection or looking at who's sitting across from you at a meeting and saying, hey, like, I don't see myself in this person, kind of to go back to what we pride ourselves on at Ellevest being, over 75% women, just under 50% people of color. We very much feel like we reflect the complexion of, the United States and the world. In terms of philanthropy and impact investing, I think that I don't know if I'd call it a barrier, but more of a misunderstanding in how to both focus on philanthropy and impact investing. So to add some more numbers to the dialogue, the global philanthropy market is very big, right? It's over $1.5 trillion, probably even bigger, because that's just kind of the aggregation of a lot of foundations out there. The global stock market, we're not talking bonds, we're not talking hard assets, is over $100 trillion. So there's very much this opportunity, especially for women who are focused on philanthropy, to align their investments around their values around giving. Capital is a tremendously powerful force. When we invest, we basically participate in that recycling of capital. And I always talk to my clients about this because, you sort of forget about it when you get caught up in the weeds, but whether it's intentional or not, when we're investing in a equity security or a fixed income security of a company, or even a hard asset for that matter, that's effectively a vote of confidence in the future value of that company. You're providing funding for them to keep doing what they're doing, right? You're saying, like, I believe in what you're doing and how you're continuing your business. And so I'm providing this capital. But when we're not intentional about that, and if we don't know or understand what we own, we risk misusing that power. It's where, what we're doing on the investment side could completely conflict with what one's doing on the philanthropic side. So again, like, I don't know if I'd call it a barrier, but I'd call it a little bit of a misunderstanding. Another heritage barrier, I'll pause there because you're nodding your head. So I feel like you've seen this.
Well, and I love your choice of words. It's a misunderstanding, which is, it's such a nice way to put it. I feel like it's a huge market dysfunctionality. It's, you know what? Here's another word. It's a missed opportunity.
Yeah. 100%.
It's a profoundly big missed opportunity because, the optimist in me absolutely believes that, many people who want to do philanthropy or are doing philanthropy genuinely have an intention of, I'm ready to use my wealth to do good things in the world. The challenge is that when you look at the data, and there's two data points that we've looked at thoroughly, at Ellevest Consulting, which is that there's $1 trillion worth of assets in private foundations that are not being put to work. And while there's a huge array of impact investing opportunities that would be perfect for that capital, and then you have $140 billion stuck in donor advised funds that's not going to opportunities. So it's not necessarily to say foundations are horrible, donor advised funds are horrible. Those are all different financial tools, but how we use them matters. And I think it's connecting the dots with the deal flow that is possible, not just in the US and Europe, but around the world. So I'll stop there because, I could talk forever.
I know.
You're nodding my head. Yeah.
Well, also taking a more impact or sustainable lens just allows you to not even take comfort, but also know you're very much risk managing those investments while they may be waiting to be deployed. Like, there are a lot of elements of there are frustrations or inefficiencies in the foundation model or the donor advised fund model. That's like, we're aware of it, but it may be beyond what we can immediately do, right? But at the very least, you can, de-risk your investments from unsustainable business practice, unsustainable assets while you're waiting for that next thing and that next philanthropic opportunity.
And imagine, Cameron, if, every institution in the world, individual, corporation, aligned 100% of its capital with what we'll call a portfolio approach to impact. Meaning today, you can absolutely meet all of your risk, return, impact expectations, right? In a way where you can align your capital across different opportunities, some more risky, some less risky, all attached with financial returns that are well balanced with the level of risk that you're taking, and have a profoundly incredible social impact for the 3 billion people who are living in poverty today.
Yeah.
And the question for you, as I'm pivoting on this, is, would more women in leadership, do you think, help accelerate that kind of change, or is it not really about that?
I think it's more individuals in leadership that look like all of us, right? That's number one. I think that there's also, and this is back to your barrier question, there's historically been, and this is a generalization, and I may offend someone in this comment, but there's, in terms of division of labor with philanthropic families or endeavors, women tend to gravitate toward the gifting, giving side of the equation. And there tends to be someone else, maybe it's a family member, maybe it's an outside party who is on the investing side. And again, generalization, not the case for everyone, but there's gotta be that focus on investing and that interest in investing. And, so much of these opportunities today, at least I feel this way. I think you feel this way too, because you're like deeply in it. Like you can feel, see, and touch this stuff. Like it is visible and meaningful. And we can obviously talk about that in a bit, but I think as more individuals and more women specifically see that and are excited about that, then they'll gravitate towards the investment side. But, until then, this sort of fear of beginning, general underinvestment, I think is a big barrier.
Absolutely. And it goes back to that statistics we were talking about at the beginning of our conversation, right? Which is 84% of women today say they want to create more impact with their money and investments. So I think what's been really enlightening for me, Cameron, going from water equity to Lebec consulting has been to understand how much the education and who is advising higher ecosystem individuals and women, foundations, and so forth really matters quite significantly. There is a huge lack of education, and there are some disconnects in terms of the financial advice that individuals and women are getting. And obviously, your work at Ellevest is at the center of all of this, but, it still feels, even if maybe we've been talking about it for a long time and there's change that's happening, there's still so much more that has to happen, especially, at the end of 2020, when we saw all the stats around the venture capital industry and, how much little of capital goes to female founders. So, from your perspective, like what are additional things that we could do to accelerate that? When you look at your work at Ellevest, like what would make you feel like you could even accelerate this at a great speed?
What we're focused on, and we're talking about this a lot more. You're going to hear, about this from us a lot. First and foremost is improving financial confidence and broader financial wellness. So money is women's number one source of stress, like hard stop. So financial wellness is very much critical in helping us live our full lives. And, we so much talk about physical wellness, emotional wellness, spiritual wellness, relationship wellness. Well, we can't really have that in its full capacity without financial wellness. When we talk about financial wellness, it can mean a lot of things to a lot of different people. It's very much kind of knowing what you have, knowing where you're going, and feeling good about that. And so that can be applied to, if it's your individual money, if it's family money, if it's philanthropic capital. I know it sounds remedial, but it needs to anchor all of us. And the thing that I always talk about with my clients is financial wellness is not necessarily the equivalent of financial independence. So financial wellness is not having wealth. There are many, many, many people out there who have achieved financial independence, but have not given a thought to financial wellness, and in many ways don't feel like they have that agency over their money. So I think, step one is start there, and that applies to everyone. I think for those who are balancing like the philanthropic side of the equation with the impact side of the equation, it's, you have to anchor around what you're most passionate about. And someone's probably done that, right? If they're making grants and pursuing things, but then it's finding like some sort of partner like you, like the amazing women in our network to help bring it to fruition on the investment side. Like I have a client who is deeply passionate about affordable housing, especially nationally, has identified the lack of affordable housing and is funding philanthropic initiatives focused on access to affordable housing. She had absolutely no, and then this is not a fault of hers. It's just a fault of the industry and access to information and opportunities. But she had no idea that she could be doing the same thing on the investment side, right? Like she could be investing in the build out of affordable and workforce housing across the country through, actually investing in these multifamily rental properties. She had no idea about what was going on, and we're kind of tangential to this in Ellevest, but what was going on in the 3D printed housing space, which is just like mind-boggling if you're following it, or even in the modular shelter space, where some companies are focusing on homeless communities across the country. So like, it was one of these things that was eye-opening, right? Because it's like, okay, I'm doing all this stuff over here, but like, yeah, I could also be doing it over here, and very much sync this up. So I would task all of us, even myself, like, is how I'm living out my day-to-day synced with how I'm investing, my own dollars.
And that, I mean, that's so helpful, Cameron, because that's such a great example. And it's actually an answer to, we've got 3 minutes left. I told you.
Okay.
Minutes.
Okay. I know it went by so fast.
It was already a question to the other question I had, which is,
Yeah.
what are 2 actionable steps we can take? But there's even another element I wanted to address. We might not have time for it, but I'm so jazzed up by what you said, and it's so important. And I wish we could extend all of this to the huge financial and investment gap that exists today for women in emerging markets. And
Mhm.
I know that you saw me share some thoughts on that yesterday, and I definitely feel also very passionate about that, because for the majority of, my journey, a lot of the work that I've had the joy and honor of being part of has been very much focused on women in emerging markets. But it really wasn't until last year,
Mhm.
where everything was breaking apart around us, that I just had this moment of realization that so much of the exciting things, or the new things, or the movement around the financial female revolution around us was still very much insular. I mean, very US, Europe focused, or maybe we're just not seeing the narrative around how to bring this to more opportunities for women in emerging markets. And so I'm curious, and you might not be able to answer this, but do you see the work of Ellevest already tackling some of that? Or like, what if you had?
Yeah, already tackling that. There's more to be done. Well, I agree with you. I think it's a privilege to be here in the US, in a developed nation, to be pounding the table around this. I think we do, but it's an extreme privilege. And this is a very familiar topic to you, but I think I unfortunately take for granted every day my access to water, as I'm filling up my water bottle, as and whatnot. We currently, on the private wealth side, actually work with a third-party manager who's making private loans to growth stage companies in emerging markets, often women founded, and or there has to be some sort of sustainable element to that business, but there's more to be done. And I agree that we sometimes get so like anchored in what's happening here, that we take for granted just so many of the liberties we have. So there's absolutely more to be done.
That's awesome. And I'm so excited, that there's already something happening there. And so, Cameron, 30 seconds. What two things, what would you advise to our audience today? What are 2 things they could do to really bring some of the great insights you suggested today to life? And you already share one of them, which is like, just take a moment to look at how you're aligning your money with your values and actions. But is there anything else that you want to add?
Yeah, absolutely that. One statistic that always gets me is that when women earn an income and build wealth, they reinvest that 90% of that into their families and communities. which is a pretty astounding number, although you're shaking your head. So, it makes sense. That's as compared to our male counterparts, it's a little, it's less for them. We're not going to ding them on it, but the way we direct capital is powerful, whether in our spending or investing or giving. So maybe it's not two things, but to your point from earlier, like it makes sense one evening to sit down and think about a lot of this. One last statistic, women keep 70% of their wealth in cash, right? So in many ways, we're probably not doing that, just given that statistic. It may be sitting at an institution that is deposit taking and doing things with those deposits that we may not be like totally on board with. And also price inflation, but that's another, that's a conversation for another day. So I would say, like, we should all take that time. I'm saying this, and then I'm like, Cam, you gotta, keep doing that. You've got to check in pretty soon. But yeah, that would be my advice. Yeah, right.
That's so great, Cameron. No, me as well. And it's also been a big objective. And we've talked about it at our team too. Like it's important. So Cameron, I definitely see you coming back on season 2 for an even longer conversation. But really appreciate you joining us today for really sharing these great insights. And here's to creating just a better ecosystem where more of us are aligning our money with our values and our objectives.
Absolutely. Thank you, Alix.